Testing, checking audio. I think we are good to go. Let's get rid of this. Open up the chat right here. And we are live, Mr. SVR. What is up? Mr. Youssef, Crypto Brad, Abdallah Ahmed, let's go, brother. FNF Bass, Zbenza, TCT Lazo. I'm checking the names to see if I see familiar names or newer names. Mr. KK, yes, a familiar. Reverse familiar. Prophet Maxi familiar. Mr. D'Antoni going VIP on Friday. Let's go, brother. Can't wait to have you on the other side. But guys, we got an hour, so let's dive into these charts. Today I have taken 0 trades here in the crypto market. Okay, I've taken 0 trades in the crypto market, and I'm gonna elaborate real quick on why. So what I'm seeing here on Bitcoin is basically Bitcoin having that temporary bounce from that lower time frame structure demand POI that we were discussing yesterday, right? Where you can see it's a 4-hour order block, but it's also a lower time frame structure demand. And I was basically explaining to you guys yesterday that we were seeing these signs of exhaustion. We were seeing the signs of exhaustion coming up right here, making these higher highs, leaving the lows intact. Let's keep that clean. And then we actually broke structure back to bearish. Okay, so we got this bearish break of structure. And my expectational order flow, what I was expecting price to do right here on the lower time frame, was to put in a lower high for a lower low. But I told you guys that this right here was the better place to be putting in a lower high for a lower low. And then at the end of the stream right here, we kind of started to go deeper into that supply zone. So my expectational order flow was a lower high for a lower low based upon that break of structure. But I told you that you can simply wait for that level 2 structure to break back to bearish if you want to confirm that lower high for the lower low, because you would need something like this to happen on your level 2 structure, and if that breaks back to bearish, that will confirm a bearish break on your level 1 like this. Another bearish break but a lower high. Okay, so the level 2 break of structure here of your red market structure pool, if you break that back to bearish, and probably on the lower time frame it will look something like this. I'm not fact checking it right now, but it should look something like this on the lower time frame. If you were to break that back to bearish, that will confirm the lower high for the lower low. Did that happen? Did you break any type of structure back to bearish right here? What I can see if I follow my 10-minute market structure pool is I can see a low, I can see a high. We're kind of combining the 5 and the 10-minute right here. It was kind of a range that you had. And then you had that push back up, and then you had a higher low for a higher high. So you did not really break any structure back to bearish. And at the same time that you didn't break that and you went higher, we can also validate price actually going higher, because we still got that 15-minute liquidity resting above right here, exactly from that high. That could be a reason for price to come back up again and make that initial break of structure fail. And basically what we have seen today was just price retesting the demand created overnight. And then we got another push up, because this 15-minute liquidity grab of these highs here on the left, where you can see that obvious buy side liquidity curve, it caused a move down, but we just front ran that daily structure supply POI, which on that second push up, we actually did grab. And, you know, my bias remains unchanged, where I'm still expecting the liquidity at 100.6K to get taken for all the reasons that we also gave yesterday, right? Now, there's a difference between expectation and confirmation, but I am still expecting that liquidity to get taken. Now, the reason why there were no trades yesterday or today, or why I was extra careful, is because this choppiness prior to taking out the sell side liquidity, it could take a while. You could get these pumps, and because Bitcoin dominance has broken structure back to bearish significantly, showcasing a failure of the local demand that we have below us right here. In that chop on Bitcoin right here, you could get altcoins having certain pumps, which a prime example of that was Trump, where I was initially looking for a short right here based upon this retest into the market maker supply, where you got your tab 1, you got your tab 2, you got your tab 3. And I was looking for a retest into that supply for a Model 1 going over in a Model 2. And I wanted to slow move up. I kind of wanted to see a forced move up into that supply, followed by an aggressive break of structure. And when I saw this move and I saw this consolidation at that supply area, I made a post in my channel saying, guys, I am not that interested in finding any local shorts here, because I'm just not very confident in the overall bias right now regarding altcoins, because you got Bitcoin having an overall expectation of going lower, but you could still consolidate in here. And with Bitcoin dominance retracing, you might get these random pumps on altcoins. And that's exactly what happened. So today was more a great, not lesson, but just a great showcasing of me saying publicly, hey, I am walking away right now, letting the markets breathe, because I'm just not completely sure. Because I was looking at this initially with the expectation of Bitcoin also going lower, sweeping that liquidity, right? And you might get a confirmation or not. There was no confirmation. There was not going to be a confirmation anytime soon, because if you want to break structure, right, you would have to break this low, which is very far away. And in the process of Trump being at that supply mitigation right there, you were still at this high. So there wasn't really an opportunity nearby to confirm a rotation back down. So I was like, if I don't have a proper confirmation and you got Bitcoin dominance in this area where I'm overall expecting lower prices, potentially even a move back down to 60% up based upon the Model 2 distribution schematic with TCT and TCT on that local tap, I'm just being extra careful. And in trading, not losing money is making money. Because Trump right here got the 2-minute breaker structure, but I just did not like it, right? You got an SFP first. That consolidation, I did not like that. Despite price actually breaking structure afterwards, I wanted to see a slower, more forced move up, leaving a lot of liquidity below, which you didn't really do here. It was a pretty fast move up, and then get like a tap and just an aggressive sell-off, like a tap and a go, right? Where it's like, okay, this move up was extremely forced. Now we're just going to flush back down, take out all sell side, and that wasn't really the case here. So when I am personally watching the charts and I'm like, I am not completely sure, right? I got these doubts in my mind. I'm like, why even bother? Why even bother forcing it? Because there are trades out there where it's a no-brainer for me, right? Where it's like, okay, I got to take this. No questions asked, no hesitation, no nothing. I just have to execute it. So this is the prime example that I was watching for a short right there, especially because we had these triple lows below us right here. You can see the little magnet still there, where I was like, I would prefer if Bitcoin can come down, altcoins can, do like a 10 to 15% correction. Yeah, around a 10 to 15% correction before actually catching back up and starting an aggressive rotation towards the upside, which would kind of be in confluence with, Bitcoin dominance doing something like this, which I explained in my most recent tweet here, when we're looking at this XRP scenario right there. And I'm like, best case scenario, Bitcoin gets the drop, sweeping all sell side liquidity at 100.6K. We get the drop on XRP into the high time frame third tap POI of the Model 2. In the process of both pairs dropping, we get a bearish retest on Bitcoin dominance, because usually when both pairs drop, Bitcoin dominance goes up, because Bitcoin simply drops less. And then we get a range creation and consolidation on Bitcoin, and then we get that push up higher on XRP. So my best case scenario, if I have to show it in the charts, is for Bitcoin to eventually make its way down towards this liquidity right here. Maybe even find some support in this region and start ranging in here, right? Get some consolidation, get some rangy price action, where, you know, your altcoins in that period drop into those high time frame third tap POIs, where if we go to XRP, I think XRP is pumping up today. Yeah. You know, so it was, the idea was down here that XRP then comes down into these levels and then starts reversing up aggressively. You know, it's an idea. It's not guaranteed. It would give us very nice entry opportunities, but maybe that's also the reason why they don't want to. Right? But the idea is still alive, but the longer it takes to get here, the more the time displacement is between tab 2 and tab 3. And we talked about it yesterday, right? If the time displacement between tab 2 and tab 3 becomes too big and bigger than tab 1 and tab 2, it decreases the probability of the model. But that's kind of my main narrative still. And I'm just mainly observing right now how altcoins are behaving in this environment where Bitcoin dominance is already confirmed towards the downside for me personally. But then your altcoins aren't really accumulative, and I'm expecting Bitcoin to go lower, right? So I'm expecting Bitcoin dominance to go lower overall, and I'm expecting Bitcoin to go lower first overall. So it's like a bit contradicting, because usually Bitcoin dominance drops when Bitcoin is either consolidating or going a bit higher, but altcoins are just outperforming. But I want you guys to pay attention when I zoom out here. When I zoom out on the weekly, like these lows, they're gonna get taken. Honestly, these lows stacking up like this, guys, it's 4 weeks in a row. I'll oftentimes use the bars for this. Like when you see these candles 4 weeks just lining up like that, like just go back, you know, it usually does not happen. Like right here, you can kind of argue, hey, we kind of got like a 1, 2, 3, and a 4. But that was after putting in a high, slowly grinding down. We end up coming back for it aggressively. But then even after having 1, 2, 3, 4, the fifth one at least took that high as like a partial sweep, you know? So it's like you can leave them intact, but like we discussed yesterday, if we go up from here, leaving those lows intact, it adds to the probability of putting in another deviation, because you're simply not grabbing that fuel. But usually these lows like this, they get taken. I'm trying to find an example. It doesn't happen that often that you have a this clean on like a high time frame like the weekly. I'm trying to see if I can find a example. No, barely. Like, you got two lows right there. Those go left behind. You barely see it. You barely see such a clean liquidity curve. Yeah, so I want those lows to get taken. It is that simple. It's just a question of how much more are you going to consolidate in this period? How much more are you going to retrace up ever so slightly with these random pumps on altcoins, because Bitcoin dominance is dropping, before actually getting somewhat of a rotation back down, sweeping all that sell side liquidity? Because the difference in local price behavior is immensely. At the lows, you have nothing but liquidity. There are zero signs of accumulation at the lows. There are zero signs of an accumulation here, 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 and then locally here, here, here. There's no signs of any accumulation. It's just slowly grinding up. Whereas at the highs, we actually have distribution, proper supply creation, you know? So you actually see proper distributive price behavior at the highs right here with your two individual TCT models and overall high time frame supply creation. And you only have these dead cat bounces, is what I like to call them. A generalized term, you know, just a dead cat bounce. You just bounce. There's nothing here. No cumulative price action. You just like, you get a bounce. So I really want these lows to get taken. So I will be looking obviously for some sort of a potential short if we get it. But right now there is nothing. We just got like a slow grind up today with a pump on New York. And we're at resistance. So we're waiting for something to develop. And then you got to be extra careful with your altcoins, because besides your altcoins, you know, ETH showing some kinds of a local distribution there isn't that much on your altcoins. You can see I was pre-planning Sui potentially, but we never made it up there. And these are all like super low time frame models, where the coin that I wanted to retrace the most is the performer of the day from the main trading pair list. But yeah, I want that move down, right? I want that move down on Bitcoin right here. I want these liquidity. I want these lows to get taken. I want your altcoins to go down with it, and I want your altcoins to outperform after. That's basically my whole narrative. And today was just a great representation of the fact where it's like, okay, I'm not completely sure on any shorts on altcoins because Bitcoin is chopping around right here on that decreasing Bitcoin dominance. So I'm gonna just hold off. I'm gonna let the markets breathe for a moment, and then I'll come back whenever I see some better things developing. And that's kind of been my main objective of today. So I hope none of you guys forced any setups that were simply not there. Like I'm seeing some distributive behavior here on Farcoin, again having a tab 1, 2, 3. Trump retails an entire pump. I don't know what happened there, but man, what a price action. We were watching Caspa there. Yeah. It's like we were watching initial distribution models, but they all got ran through. And then kind of got invalidated. TRX as well. Still in that short though. Short is still active on TRX. Still want Injective to come lower as well. Yeah. I want APT to take out these lows. And obviously we have XRP with the overall higher time frame idea, which is becoming more tight and tight by the day. And only Tau has some potential accumulative price behavior, but you need to break market structure first if you want to confirm anything significant. Yeah. Yeah. So it's more a day of patience, guys, which is super important, right? You gotta learn to be able to do nothing. Observe, and just do nothing. On the other hand, though, Forex is slowly coming back. Forex has been super... it's very interesting to see the market reacting so differently. The moment the month of June started, truly. Like you can see right here, we're coming into an obvious liquidity level at the highs. This yellow box is just a fair value gap, in case anyone was wondering. You know, we open the week, we go up, take out the previous week high, straight into liquidity, Model 1 distribution during Asia, move back down, you know, where I would just target this local range low here, or this demand as a maximum target. Got some demand lower, but overall amazing. Weekly open, move up, take out previous week high, into resistance, and then get the Model 1 distribution to go lower. And then today, you had a very similar setup, but then from a daily perspective, where it's like you have the daily open, move back up, take out previous day high, Model 1 distribution, Asia liquidity below you, right? Pre-New York opens, boom, move back down. New York completes the order flow objective. It's crazy which algorithms get turned on for the month of May, for the month of June relative to the month of May. Also, this is getting a move up. Yeah, it's perfect. So you can just see there are always opportunities each and every single day. That's why I like to have crypto and Forex, and I really just watch both. When crypto is doing an amazing job, I'm not really focusing on Forex. If crypto is kind of, you know, in a sketchier area, I like to diverge my focus more into the Forex category and realize the gains there. But look at this. This is like, study this. If you want to create bias in combination with your TCT models, Study daily open, taking out previous day high, which just align with liquidity points as well. Model 1 distribution with Asia liquidity below you, London liquidity below you, entry kind of like during pre-New York or New York, and then get the rotation to sell side. Bro, textbook setup right there. You can screenshot this and study it from a timing perspective. So you got your Asia like this. Boom. That's all that you need. That's all that you need. If you want to talk about textbook, here you have your textbook. Okay. Now, we all agree on the fact that we want lower here and we want these lows to get taken out. So let's keep it in the back of our mind when you're looking at any accumulation models at the moment. I'm checking the chat right now. Isn't Bitcoin in the manipulation zone above range high? No, I don't have any range pools here. You can kind of call this an ugly distribution, you know, maybe, but it's not something I'm interested in trading. I just want these lows to get taken out. It doesn't even have to be like that, just overall these lows to get taken out. Mr. Valid Third Tap is here. TCT Lazo, what do you think about the distributive price behavior we have right now on some altcoins leaving sell-side liquidity? Well, I want that to get taken. I want Bitcoin to come down. I want altcoins to sweep sell-side liquidity. And then I want to go long on the confirmations on the high time frame third taps. I've started the 2024 mentorship. Lesson 3 already. Found some of my mistakes. Amazing, brother. You're in for a treat. You're in for a treat. Hey, bro, please check with local range. There's nothing here, brother. There's nothing here. Guys, you need to pay more attention, okay? You guys need to pay more attention to my post-trading analysis videos, okay? Because sometimes I see you, and I love every single one of you, but sometimes I see you guys posting setups, tagging TCT in it, and I'm like, that is not a TCT setup, my brother. I'm like, that is not, I don't know what model that is, but that ain't my model. Okay, and I'm saying this because I love you. I'm saying it because I love you. Because if you know how to draw the correct ranges, if you know how to draw the high probability ranges, and look at the correct models within the correct context, a whole new world will open up. When you guys ask me sometimes, Lars, why did this model fail? It's because it wasn't a model in the first place. Or it wasn't a model that you should be looking at. But only if you study me every single day consistently can you get the answers to that properly. Because sometimes context is more experience related and you will get the feeling for it. But the most important thing is to get a high probability ranging environment where you don't want to validate your range just by seeing something like this, which looks like market structure, and then pulling your range and saying like, oh, but it's in the DL2, so it's valid. And then pulling something like this, and then this is what I see often. Okay, so analyze this if this is you. But sometimes I see something like this, and then people draw it like this, and they're like, hey, we have a 1, we have a 2, we have a 3, and we have a good looking return to zone right here. And this might be a good looking return to zone, but the starting point of your range is not the starting point of your range. Because the starting point of the range is created by market structure. If this is V-shaped price behavior, it is market structure. And guess what? That is market structure trending up. What do you do when market structure is trending up? You pull your range from high to low once you come back to the equilibrium. So pulling your range like this, it might look good, it might look tempting, but it is wrong. Because that right here is not the starting point of your range. You want to have your range where the purpose ever since creating that range was to get reversed. If we take Tau, for example, right now, so we got this potential accumulation model on Tau. I want you to analyze this range right here. How do we pull this range? Okay. How do we pull this range? You have market structure trending up, making a higher low for a higher high. Okay. Second biggest problem, or most common problem I see people. They see market structure trending up, they pull their range from high to low, and they start focusing on deviations at the bottom. Guys, in the mentorship, I made it clear what the difference between accumulation models and reaccumulation models. Okay? You want to draw the range so that the range high is aligning with your Wyckoff high. What is your Wyckoff high? Your Wyckoff high is the highest point that price has traded in between the taps at the bottom getting created. So you have your tap 1, you have your tap 2, and then you have your tap 3. This is the highest point that price has traded in between the 3 taps getting created. So if you pull your range from swing high to swing low right here, or initially this swing low and use it as your deviation, is your range high aligning with your Wyckoff high? No, because this would then be your range high and this would be your Wyckoff high. Well, then how do you pull the range like this? You use your other level of market structure. You know, I refer to it in the initial mentorship as high time frame, mid time frame, low time frame, but it's just basically around different pools. So you have the pool from the bottom to top, and you have the pool from top to bottom, where on the 18-hour you have a low, you have a lower high, and a lower low. Just different levels of structure. Okay, let's make that red. So when we are reaccumulating, meaning another accumulation in an uptrend, because you're already in an uptrend, you use that structure from top to bottom and pull then it from low to high, because that is a local downtrend. And now your range high is the Wyckoff high, and you focus on this range. So then when we start focusing on that range, and I'm telling you guys, listen to that on repeat, because I see that mistake way too often. Okay, way too often. When you're looking at this range and how it has been developing over time, what happened ever since creating this range high right here? Did you get any V-shaped market structure? Or is ever since the starting point of that range, the purpose of it has just been to create buy-side liquidity with a high right there? Wrong too. With a high right there, and 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 all these lower highs. All these lower highs right there. Lower high, lower high, lower high, lower high, lower high. Ever since the starting point of this range, the purpose of that high has simply just been to get squeezed out later on. Maybe because of this accumulation, maybe just later. But there have been no deviations towards the upside. There has been no market structure pull like this that then ended up coming back down and you pull your range like this. No. There's been a swing high, an individual swing low and swing high, where after that swing high, there were no deviations towards the upside. It has just been price curling down. And that is it. That's the range that you want to be focusing on. Those are building the foundation for your high probability ranges, where you can start looking for accumulation models. Because then if you confirm a break of structure, let's say you break that structure back to bullish, and you get a retest, and you're expecting a higher low, and maybe you confirm the higher low, what's going to be here to make price reject? Nothing. It's going to be a cascade event of buy-side liquidity, pushing price higher, where all the people that have their stop losses above those swing points, because they represent liquidity points, because they're buy stops above it, they're going to get stopped out, cause a buy order coming into the market, and then boom, you squeeze higher. Okay? So those two things, the wrong range pull, where the Wyckoff high is not aligning with the range high, and just overall using market structure as your range starting points and not an actual range starting point. So focus on those two things the most. And it started with width. I don't see anything here on width. No. Like, you got some sell side liquidity below you right there. But this is not a proper good looking model. It's too deep of a deviation. Like, the deviation is almost the size of the range. Look at that. This deviation is almost the size of this range. So you can sweep that sell side liquidity. I want that sell side liquidity to get swept because I want Bitcoin to go lower. But you know, we got to be patient for the proper models. Trump news caused a huge pump. Oh man, you can't trust the guy. You cannot trust the guy. Okay, talk about Tau. Well, that's what we already did. Bitcoin dominance can go lower and altcoins also. It's not that common. You wanted Lars and the market makers watching this. You're not gonna get it. I don't think the market makers are watching my channel that closely. I think we'll be safe. It's just that, you know, we can still get the move down. Don't get me wrong. It's just that it would have been better to just to continue with the immediate move down. But you can get a retest like that. That's fine. We will still be watching the same. Something like that. Can you explain the concept of sell-side liquidity? Liquidity lecture, TCT mentorship 2024, brother. I think it's lecture 4. Lecture 4 of the mentorship that you can find on the YouTube channel you're currently watching the live stream on. What session indicator is that? FX market sessions. Right here, if you go to indicators, FX market sessions, Boitoki, and these are the settings. I want lower, just can't figure out whether they want us to have those lower accumulation entries. Guys, I want you to realize that currently in this live stream, we have 140 people watching, okay? That will probably add up over time to like 1,000 views. I have 11,000 followers on X. The fact that maybe you are seeing the way I am seeing the market, and you can see just the market maker involvement in the chart, everything will start to become clear for you. But 99.9% of the trading population, especially in this crypto's Twitter space, has no fucking clue what they're looking at. They have no idea what they're looking at or what to do. It's all about engagement. What gets the biggest and the most views. So even if XRP were to come down here, I'll tell you, I told the community about this today. If XRP comes down here and you get a breaker structure confirmation, you might be looking to long. But that would probably be caused by Bitcoin doing something like this. And then guess what? Everyone in their right mind that loves to post fractals will be posting a fractal of this top right here compared to the 2121 top, which is not the same. It is not the same at all. I hate the fact that people are calling it the same because they're just not validating the technical aspect behind the work of the market maker manipulation playbook. But this is not the same. But guess what people will be posting? If you get a drop down there, sub 100K, they'll all be posting this. Nobody in their right mind, if they seeing all these posts on their timeline, which will get hundreds of thousands of views, will pre-plan a swing long on XRP if you drop with it. No one. Except the people that use smart money concepts and understand the Wyckoff models because they watch the TCT mentorship, right? But you're such a small population that if you are talking about, I don't know if they're going to give me my entry, brother, your entry is what's needed to happen for an overall fuel move towards the upside, a sustainable move towards the upside. If XRP doesn't do this, the move up is less sustainable. If you want a bigger expansion on XRP, you want it to drop 15% first. Because this liquidity down here fuels the reversal back up. Okay? So, if you see retail talking about a certain POI, then you can talk about, front running that POI. But when you are looking at a specific extreme liquidity level based upon the TCT model, trust me, you got nothing to worry about. Because when we drop here, it's most likely because Bitcoin drops right there. Everyone will talk about the 2021 fractal, and they will have no idea what could happen with altcoins if you start to consolidate here on Bitcoin for a potential recharge for like a third tap, whether that's a Model 1 or a Model 2, depending on, like, the fact that you got this tap right here makes a Model 1 more likely, and they'll all FOMO back in at the highs right there on your altcoins, and then we will be taking profit. Trust me, that's the name of the game. So you got nothing to worry about. Trust me. When you're looking at third taps of TCT models, if they don't happen, there's no entry, but they're not going to get front ran because a few 100 people are looking at it. You also scale with spot aim when we sweep that low? No. I'm not looking to position on, you will never catch me positioning on spot on an altcoin like XRP, which is a major that already pumped 550%. The purpose of this move up could literally be to create a macro range to then go over into a distribution. We see it all the time where the accumulation creates the range low, and then you take the main high, and it just goes over into a higher time frame distribution like this, where you deviate, and you go down. We were talking about XRP down here at the accumulation model. Did I miss it? Yes. Was it my own fault? Yes. Did I share it in advance? Yes. So some people profited. But this is where you want to be looking for spot. You don't want to be looking for spot here. Because I personally really don't agree with the people talking about some Elliott wave BS of $20 XRP. If it happens, bro, it's not. If that happens, it's a GG's from me, right? I would say that's respect. But then you're telling me a normie can buy right now and get an 8x on their investment on an XRP project, which is like top 5 in size. Is XRP top 5? I think it is. Let me fact check that real quick. Coin market cap. Yeah, it's 4th. Yeah, top 5. No way. Like, no way. So my max target will be a new all-time high as well, because I just don't like these highs right there. I don't like them. So that's kind of been my main plan, guys. I want these lows to get taken. I'm waiting for these third taps for potential swing longs. And if I can get scalp trades in between, I will take them, right? But we haven't gotten the opportunity to do so. Me personally this week so far. Some people on the server took some injective and ETH longs. They weren't the highest probability, but they were valid. So I'm glad they worked out for them. I was just being patient. Because especially, guys, I want you to listen closely to me right now. The first of everything you do is almost literally the most important. When you're working out in the gym, the first set you do of your workout, your first working set, so you can warm up prior. I'll let you warm up prior. But your first working set, where you're going to failure, where you're actually pushing yourself, the intensity you do on that set determines the tone of the workout. If you're kickboxing, the first round, you have to show your dominance, because it sets the tone for the remainder rounds in the sparring session. The first trade that you take in a month, if you take a high probability setup that you're super confident in, no matter if it's going to be a winner or a loser, it will bring you in a flow state where you want to journal that trade because it's a high quality trade. You want to journal it down, you want to take it, and most likely, because it's such a good trade, it will also be a winner. And then guess what? The next trade, mentally, you're trading with a profit buffer. So it's way easier to take the second trade, because if you lose, you're still up overall. Right? The first trade of the month is super important for me. And I want to take a high probability setup because it can deliver that flow state. And then things can start rolling super quickly. Super quickly. And you want to be trading from a mindset of abundance, not scarcity. There's always another setup. So if a setup is not that good and you decide not to take it and it ended up playing out, that doesn't matter. It does not matter. Because there's always another setup that can deliver more conviction for you and not all that hesitation. Okay? Took me a long time to really apply that mental model. Brother, you said there's nothing, but please check the 5-minute chart. Brother, if I say there's nothing, there is nothing. I'm not going to go on the 5-minute chart. There was nothing there. The time frame doesn't matter. How much is Discord? Bro, Discord, what's Discord? $60 a month. If you purchase monthly, it's $50 a month if you purchase annually. But I got some updates coming soon, so there might be a discount. I never do discounts, but I got some pretty exciting news very soon. So we'll see. In my opinion, that shit's still too cheap, though. Should we be watching on the 3-hour order block on Tau? It's on the second tap. Yes, you can watch it, but you're already in a valid POI for a potential third tap. Because I was looking at this entire structure demand POI right here. I was looking at the entire structure demand POI, and I also got some exclusive POI selections for third taps regarding certain variables in the model that I don't want to talk about right now. That will validate this already as a good location for a third tap. So you just need the break of structure. If you can come above this high, then we can look for retracements longs for a target of 480. Seen so many 2021 double top calls. Yeah, I really dislike that. That's a narrative right now. Like, I understand it, but it's not the same. It's simply not the same. Let me check. TRX could have a nice redistribution model to complete the higher time frame model. I've basically been applying setting and forgetting on TRX right here. If I were to take a trade, indeed, I think if you draw your range, it's very important, and you need to analyze this for yourself. Let me hide this one. When you're in a distribution model, okay, it becomes less nice if you already sweep extreme opposing end liquidity to trade TCT and TCT within the model itself. Preferably you want to have, still liquidity lower whenever you get that. But in this case, you swept the extreme liquidity on the opposing end. So the extreme sell side liquidity right there within the range. The most obvious higher time frame low. But you did create new liquidity with these two lows here and the overall slow grind up right here. So you can be looking for TCT and TCT. Again, TRX is a more illiquid pair. So I won't really be that interested in trading TCT and TCT models because I would have to open that on another account because I don't want to ruin the average entry from the pivot point right there. But it's important you start your range from here and not from here, because this looks more like market structure for two reasons. One, it just looks like market structure to begin with. It's more V-shaped. Even if I go to the 3-hour, you can see right here, it's kind of like 2-3 hour structure. It just looks more V-shaped. But also because it's that first impulse towards the upside. The first impulse towards the upside after getting that aggressive sell-off. Typically, that's when you have your market structure pull, whether it's a lower high for a lower low, and then you pull your range from an accumulation standpoint later on. But if you end up going higher and you get like a higher low for a higher high, it's oftentimes your first market structure continuation before creating the range in here. So very important for all of you to note down. When you have gotten an aggressive move in a certain direction, the first pivot point creation after that, especially on a lower time frame, is usually your market structure continuation, and afterwards you go into a range. So if the move is looking a bit more like market structure, then, and it's in combination with that first move, be extra careful. Okay, be extra careful. But you can look at something like this. We also got some supply up there, so it could just deviate higher, right? It could go a bit deeper, come back inside, and then end up pulling back for this and get like a model 1 here. That will be a high probability setup. That would be nice. I would watch something like that. If you just get it locally in here, then I'll just keep that position open, because, you know, the average entry rate there is in a super comfortable position. Mr. I love cats. So a wick into demand order block mitigate the whole block. So a wick into the demand order block mitigates the whole block. If you have a block and it gets tapped, then the block is mitigated, yeah. Unless you have a lower time frame block inside of it that isn't tapped, then you still got some, you know, more refined, unmitigated parts. I have a question. Isn't the range for Mr. Rio TCT, isn't the range on Tau on the third tap valid from bottom to top? I think you are trying to apply TCT and TCT here. You can only apply TCT and TCT if you have a high probability range. So I think you're looking at something like this. But then again, what did I just tell you guys about high probability ranges? Pay attention now, because we just talked about it. How do you get high probability ranges? Is it by looking and creating a range that looks like market structure, but just because it's in the DL2, you're like, nah, I'm going to use it? Or do you have a certain buildup from the high down towards the low? Who remembers? Who remembers? Is this a high probability range? Yes or no, and why? With the explanation I've given you just a few minutes ago. I'm seeing okay, we say ship return to zone. Massive move down. It's market structure, exactly. It's not a range, it's market structure. If a purpose of a range is sideways price action and you get a buy straight into a sell, do you have a range or do you have market structure? When you combine this range, you need to be rational, because nobody is rational, right? This is the most common mistake I see, and I explicitly say in the mentorship, you gotta be rational. If I confirm or if I look at that range and I compare it to the high time frame range, what's the difference here? This is the low time frame range. This is the high time frame range. What's the difference? Do you see all these highs getting built up? Do you see the curvature coming down? Do you see all these lower highs where you have all these primary lower highs, but also the individual candles are just making lower highs? This is the low time frame, quote unquote, range. This is the high time frame range. Is this a range or market structure? It is market structure. Could it go sideways here for a long time? Yes. Could they create a better range over time? Yes. But probably not a high probability model, because the move down between tab 1 and tab 2 from the high there is too fast. Uh, 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 uh. What about the demand zone on the 2-hour on top below that third tap? You can come for it. Those could all be reasons why price is pulling back. You know, maybe if we get a correction on Bitcoin and we get a correction on XRP, you know, Tau only pulls back 4% or 3% because it's just holding up stronger than the other pairs. And then you could pull back into this demand POI. I'm just saying this is already a valid third tap from a POI standpoint. But how do we confirm it? By breaking structure. So if price decides to grind lower, that's fine, right? Because we're simply waiting for that bullish breaker structure. But if you get the bullish breaker structure right here, it's already a valid third tap. And you don't have to say like, oh, I'm going to wait for this. No, this is already a valid POI. Now we just need to confirm it by breaking structure. And if you don't break structure and you go lower, well, then we can say, okay, well, there was some sort of a reason to go lower because we have this demand here, which is also a 3-hour block. So you're already at a valid location to be putting in a third tap. You haven't just confirmed it yet. So if you want to grind down lower, you can, because there is a reason to. But if you start to break structure, then that's already an entry. During the bear market, would there be more or less TCT setups? The exact same. The exact same. The only time when there was no good price action was in the last 2 weeks of the bear market right here. This was dead price action, bro. This right here was dead price action. And that is the key indication of a bear market actually bottoming out, because then volatility becomes that low, and that actually marks a bottom. And you can check that by observing the Bivel chart as well. But no, like you can even see it, right? Just go. What do you see here? I'm seeing perfection. I'm seeing the TCT models everywhere. I'm seeing the exhaustion. I'm seeing the TCT models getting the moves down. Man, I remember a lot of models in here as well from back testing. Accumulation models right there at the bottom. It's the exact same. It's just it's volatile price action, but just towards the downside overall instead of upside. Okay, check the Pepe chart. Is that a TCT worthy setup? There's no. You can see you have some sort of a distribution, but it just doesn't meet the high probability requirements. You know, the third tap is too low. No proper POIs. Definitely also a lack in market structure opportunities. You know. So there's nothing here for me. If you want to have a continuation, you sweep that liquidity and then you just go higher towards this buy side liquidity right here. And otherwise you can just get a retracement because there was no proper accumulation model here at the bottom to begin with. So it's been a sketchier move up overall, which again aligns with my vision of going lower here, sweeping sell side liquidity, coming into the high time frame POIs, and then swing long it back up. Again, guys, I want to remind you, despite that being my preferred scenario, I don't marry ideas, right? I adapt. If I see the markets pump, I will try to find longs. But again, I find longs on the high probability accumulation model. So I would need to see range creations. I would need to see the high probability range environment to take the high probability setup and then execute accordingly. And these lows right now don't have that. They don't have the proper accumulation models. So that's why I'm not positioned. I'm an extremely strict trader. I see my model, I take my model. I don't see my model, I don't take a model. It's that simple. It is that simple. Christmas price action was literally dead in 2022. Bro, that marked the bottom. Like that was, I remember Mr. Goblin Town. I took a trade on Bitcoin. I remember it like it was yesterday. I was on skiing vacation. And I took a trade right here. It wasn't a TCT model because I wasn't trading Wyckoff at the time. But I took this trade right there. I took the liquidity sweep off of here. Bro, I remember it like it was yesterday. I took a trade based upon just like some divergences and SFPs. Kind of having something like this. And I was targeting, I don't even know what I was targeting. But I was targeting somewhere lower. Bro, I was in this trade for days. Ever since that entry, prices went sideways for a week. Having nothing. That's why I remember it so good. Because I didn't have the best trading psychology at the time. Bro, that was stressing me out. This is a week worth of price action right there. Oh my god. I think I even ended up like getting stopped out. Because I trilled the stop. I think I trilled the stop loss and then I got like stopped out right here. And then it moved, you know, like the typical beginning trader situations. How much were you risking per trade back then? I was always risking around $100 per trade. That was always my my go-to. I should have done less, but I always did around $100. And then when do we long Adam? Man, we long Adam when we get the confirmations. There are just no confirmations right now. But yeah, guys, I want to make it very clear the purpose of this video or of this live stream. Okay, yesterday we gave a lot of secret gems. Okay, yesterday we gave a lot of secret gems, talking about different details, about different certain rules and adjustments that you need to be aware of when trading the TCT models. We gave the overall bias where we were expecting a lower high for a lower low. You didn't get the lower high for the lower low, but it also never confirmed. We got the move up towards supply right now, sweeping buy side liquidity. I still want to see my rotation back down, but for that to happen, you would need to break market structure, which is right now this low right here. So as long as you don't break that, you're not going lower. Again, if you take that high once more, okay, if you take that high once more, then the market structure low changes to that low. Because once you take the high, you check what was the low between the high getting created and the high getting touched, and that's your market structure low. So if we can break it to bearish, we can start to see some actual reversals towards the downside. For now, that is here. If you take the high, you move that market structure low up. My preferred scenario, okay, is Bitcoin going down, sweeping sell side liquidity, altcoins going down, sweeping sell side liquidity, confirm high time frame third taps, and long everything back up, with XRP being the main setup. I did not take a single trade today. Didn't take a single trade because I wasn't completely sure about the bias, because Bitcoin could be going down, but I couldn't confirm it, and Bitcoin dominance was going down at the same time. So I decided to back off and let the markets breathe and do their thing and come back when I see the high probability new developments in the market, which is a crucial lesson because that's how I avoided a loss today. And for me, avoiding a loss is like making money, because not losing money in trading is making money. Okay? So when you are not completely sure, don't force anything. Make sure you have your bias correct, what you're expecting the market overall to do, by prioritizing Bitcoin and the relationship with Bitcoin to altcoins. And then you wait for your high probability models to develop, and you want to take the models where it's like, yep, this is the trade, no hesitation, just execution, and you stick to the plan. Because if you hesitate during your entry process, the only way you gain conviction, and listen closely to me right now, because I just know people are struggling with this. If you struggle or if you hesitate during the entry process, the only reason you are entering is because you see price going in your favor. And then you're like, okay, the short looks good. Boom, I enter. But if you are hesitant during the entry process, you gain conviction by seeing price go in your favor, not because you're expecting price to do it. That's why you had the hesitation in the first place. So then if price goes against you, that conviction gets thrown out of the window, and now you are super vulnerable of not sticking to your plan and chickening out of the position. And then again, if you chicken out because price goes against you and it goes back into your favor, you are very vulnerable of FOMOing back in, because that's where your conviction got created in the first place. So if you hesitate during your entry, don't enter, because you are vulnerable of not sticking to the plan. And that can wreck you more than simply not taking the trade, because then you'll just not lose anything. And there's always another opportunity in the market. Okay? I'm seeing one more question. Can you give advice to people who want to trade with a full-time job? How to trade in that situation and improve? Any time that you have left, you dedicate towards the charts and studying. What you want to do is maybe get up earlier in the morning, make an overall plan of what you expect Bitcoin to do, and apply a reflecting period at the end of the day on what the market actually did, while also using my YouTube post-trading analysis videos as an actual practice material where you go and try to find the setup yourself first and then watch me go over it and compare the thought processes. And once you gain that knowledge and you start to understand what you need to look for in these markets, now you can slowly start to set alerts at POIs where you're expecting certain things to happen, at third types of models that you're expecting to trade. And once you understand what to trade and what to look for, the TCT trading style is not time consuming, because you can set alerts at the POI and you have plenty of time to enter with your alert going off and you noticing it. Because your alert, you still need to wait for a breaker structure confirmation. And it's not like a reaction type of style trading. So TCT, if you are not like active behind the chart, is perfect, because you just set an alert at the POI and set an alert at the breaker structure. But in the beginning, you need to gain the right knowledge. You need to know what you need to be looking for in the first place. And that is gained by just practicing, observing the information. So if you have a time-consuming job, you either want it or you don't. So the time that you have left, because you have some time left, you dedicate at least 1 to 2 hours, okay? Maybe a day, maybe a week, just what you can, you apply it. And then you build that skill over time. And then once you have the right foundation in place, now everything becomes way easier. But the beginning is always the hardest. So it's just a question of how bad you want it. It's a lifetime skill. And you just need to put in thousands of hours. So depending on how you want to put in those 1,000 hours over, spread out over which time period, that's up to you and your situation. But you need thousands of hours. So if you want to do that by 2 hours here, 2 hours there, 2 hours there, and spread it out like that, then that's fine. It's a lifetime skill. You got long to live, hopefully. Okay? But you just need to put in the work. And if you have a time-consuming job, the only work that you can do is the work outside of that time-consuming job. Please look at Brett. I bet my house on that damn blue thing. Take it from me. Cash that out and start focusing on you consistently compounding those gains. Okay? I have no idea what the Brett chart looks like right now, so I'm just want to switch your mindset to, instead of hoping for returns, make sure that you are realizing returns. Like, I don't like, you have to realize, what are you hoping that Brett's gonna do? A 10x, a 5x? And then what? You have no skill. Zero. You really think you're gonna make another 5x from there? You think not everyone thought that in the crypto market and got wrecked? Build a lifetime skill now and enjoy the benefits later. How nice would it be to know that you have a skill where you can be in cash positions, not worrying about the markets, but just trading the volatility of the markets? Guys, there's nothing else like it. I can make more money on a well-timed, high probability accumulation model at the Pico bottom, like the Sui trade that we took publicly, than an entire spot portfolio. Because that one trade is a 30 RR. That's a 30x on your risk. A 30x on your risk. Most people hold meme coins hoping for a 30x return. At least if you want to be a DJ, trade a high probability model that's 30 RR. And you can have your cash risk on the trade multiplied by 30. That's basically what RR means. Risk to reward. Mr. G, do you mean take the entry in example long and then let it get stopped out if wrong? Yeah. Well, Mr. G, first, if you hesitate, I wouldn't even take the entry in the first place. But if you do make the decision to enter, you need to stick to the plan while being in the trade. Otherwise, you're going to be vulnerable to jumping back in, back out, back in, back out, and you get wrecked on fees. How to check if the model is bang on? Man, you need the private lectures for that. I have basically given away all that sauce in my YouTube videos. So if you pay attention to the YouTube post-trading and ads videos, you can easily figure it out. But for a real structured process and what to look for, it's all in Discord. Advice for people who want to trade full-time. Prove to yourself that you can make more money trading than your job. Or have at least a 1 to 2 year buffer where you know, okay, if I don't make money in the next 1 to 2 years, I am good and I'm in a comfortable position. The problem that can get created is that you spend too much time behind the charts because you have nothing else to do, and then you're forcing setups that are not there. Because once you know what to look for, like we said yesterday, less can be more in the trading markets. $1,000 with 20x on XRP from 1.9 to 3 will give you 10K at the top of the range. Yeah, but that doesn't matter. Just apply risk to reward. So let's say we come down here. Let's say we do something like this, okay? And you get a breaker structure, and you enter on the breaker structure. Focus on the risk to reward. Stop loss goes here. Target is there. The risk to reward. Let's keep it simple. Right here, the risk to reward is 10. Whatever you risk on this trade, the reward is 10x that risk. Now, on a high time frame setup, I can easily risk 3 to 5% of my portfolio, of my account balance. So then you can gain 35% on that total balance in one trade, cash. If you want to have a 1K risk, it's going to be a 10K profit. If you want to have a 10K risk, it's going to be a 100K profit. But it's cash compounding cash through trading. Did you have a full-time job before trading a 9 to 5? No, I'm fairly young. So I was in uni and I dropped out of uni. And then I had a gap year. But I had no full-time job. I had a side job though. I was actually pretty blessed. I did the accounting of a company, which is online computer work. So online computer work for 10 hours a week when you're trading is like the most blessed side job that you can ask for, which I was really blessed with that. That was like, it paid me like 1K a month for like, bro, it paid me 1K a month for very little work. And it was computer work, online computer work. So, bro, that was like the best thing I could have asked for at the time. Literally, it was 10 hours a week. Yeah, 10 hours a week, and then online computer work. That was amazing. What would you consider a high time frame trade? High time frame trade has to do with range duration. So this range duration is like, if you confirm it, it's 130 days. Like, that's massive. When we're talking 20, 30 days, that's already high time frame for me. 120 days is nuts. That's absolutely nuts. If you can trade, you have a career job for life. Exactly. Okay, guys, we've been going for an hour and 10 minutes. Hopefully, we get some nice price action tomorrow that we will be going over again. So, hopefully, you guys are kind of following me along during the week, where we're kind of recapping price every single day. So you kind of get a view of my head and my thought process behind, the price action on the chart in a daily basis, because that is normally not what you won't see if you're not inside the Discord. And that way you can kind of follow along, because we can change these bad habits that you might have just by a week watching someone else go over it and how they structured it and how they traded it. So it would be nice if we can catch a trade this week so we can elaborate on that more as well. But it's not up to us to determine whether we catch a trade. It's up to the markets to decide which opportunity is going to throw at us. So we have the overall expectation, which is lower before higher. And we're going to see if we can find a trade alongside that bias. If not, that's also totally fine. And I'm going to see you guys all tomorrow. Same time. Same location. So I love you guys. And to the people in the Discord, I'll see you all for London Open. Okay, guys. Peace out.